Let's see where is. Oh, we're not getting any trading view. Bear me a second. Do. None of that's working. Let's get rid of it. Do. Hey. Do. Let's see now. This was last level. So you can see there's still lows, right? There's still a low here. There's a low here. But the liquidity indicator, good afternoon, hasn't generated a level for it. So it's not just any high and low. It's a specific high and low that meets the criteria for the liquidity indicator, right? So this is what makes it so different, because it's not just any high and low. Like this hour here, right? We've got highs, we've got lows. Zero liquidity generated, right? Hope we've been having a good day. We've got Christmas vastly approaching. Do love trading London. Love trading London. Let's have a look. We've got news coming up today. Normally I'll be done for the day now, right? I trade the morning. And I am done, so we want this month. Shush. So 2 PM. Is that UK time? Hang on. No, I think it's your time. Yeah, so we've got FOMC, federal funds, crude oil at 10:30. So news later on. We'll be off the stream by then anyway. So nothing impending. So should we have a look at? Should we recap the liquidity today? For the people on, what would you like to look at? We have this beautiful cross under the zero line here, right? If you took that lazy boy, that would have been a nice 1R and then trailing. Beautiful. Beautiful. Really good. Really, really good. Let's have a little look around, shall we? I haven't looked at any other pairs. Just been trading NQ this morning, so... oh, no. I was short gold. That's right. Let's have a look. Woohoo! So, forgot about gold. Just hit TP on gold. Right. Should we see how this trade came about, right? So when we talk about what? If price is going to go down, dynamic TP has got to go under the zero line. So I saw some people shorting around here, right? And maybe here, you could see that maybe it was going to go under, but no. So here, you can see this is where we actually start to drop off. And when we go under that zero line, now's where you're expecting price to start targeting that lower liquidity. Right? And as you can see, we got a sell off. That was my trade. Liquidity level was 70%, right? So we had high probability here. I wasn't looking for anything down here, right? What have we got? What have we got? We're on 5-minute liquidity here. Let's even go down to the 1 minute. So we have got some other levels that are high probability, but not still mainly around this level, right? Still mainly around this level. And you can see that both of those get taken out, which was our high probability target. Boosh! Yeah, I mean, we've got this, you know, after that double tap of that liquidity, grab again. We can often do that, right? Where we grab, pop up again, grab some more, pop down again, grab some more. Like to see the dynamic TP come up, but boom, yes. Well done, my man. Out in profit. That's what we like. Very good. Crude's fully bullish. I mean, look at that transition, right? So we have all this downside, right? Cross that zero line. Transition. We stay strong all the way through. We do have a little bit of a drop off here, right? And again, where we mess around. But dynamic TP, trend AI, you can see is super strong. Very, very high. No weakening of the trends, right? When these are dropping, we come back above that zero line. And finally, that bullish momentum plays out. We haven't got... It's a very, very steep drop, isn't it? Look at this. Really strong drop. So we've taken this level, Yeah, difficult to say, really. What about ES? Yeah. Lots of strong liquidity below, right? Let's just replay. Yeah, so nothing crazy above. Just these highs here. But we smashed them. Now we're driving down to these levels. Nice transition, come over the zero line, right? So we break the low, start transitioning, cross the zero line. Beautiful short, right? And we've still got plenty of room to go. You can just see how, like, when everything lines up, when you start seeing that movement and that dynamic TP crossing that zero line, like, you don't always get a strong move, but if it crosses and you don't get a strong move, then that is a good indication that maybe that direction's not where the market really wants to go, right? So we're in a sequence 2 bearish. There's those high levels getting tapped straight away. I always say with CL, right, I don't wait for a 50% retracement with CL. If I want to get in, I get in, because a lot of the time, especially when short, right, price just goes. And it's lovely because you get done right quickly. So we've just smashed all those levels. So any trade, this is the trade where we wanted to be, right? We get a sell signal here. I doubt at that time the algo would have been in line to take the short anyway. Let's have a look. Okay, we're corrective bullish, actually, right? So we get the sell signal. So we're bearish. We're still bearish. So you absolutely could have taken the short at this point, right? Stop above here. Targeting 1R. And then leaving runners for the levels below, right? So you absolutely had a high probability entry. The algo was corrective bullish, meaning there's a 89% probability we're going to close bearish. You get a sell signal. You get a tap at 50% even if you wanted to take it, or even if you just took the sell signal, right? Absolutely beautiful. Then price comes up. We start heading. We take the lows of the previous hour. So even if you waited for that here, we've taken that liquidity. We're coming right down to those lows. If we're bearish, we expect what? We expect the low to be in the last 10 minutes, right? So we're currently 41 minutes. We've still got time to push further down, which is going to drag this down towards that zero line. And we can see we've got this high probability liquidity below, right? So if we're going to go bearish, if we're going to go down, we're going to drive down. Makes sense that what? We come down and take some of these levels. But either way, you could have just taken the 1R and been done, right? No problem with that entry. The 50% targeting even these liquidity below here. And then even if you wanted to leave a trail running down to this low, could have done that, no problem. But you had a high probability entry, right? You could have got in knowing that it's more likely to drive in the direction of your trade. And when I say more likely, you'd have got in with over a 70% probability of more lows, right? With high probability, not just me saying it, a 90%, a 96% level is sat below there at the moment. It was 93, right? So I'm not guessing. I think I was a well out, mate, on your gold trade. Okay, NQ. See if we can tap this last level from yesterday. So these were the levels I posted last night, right? So when we started the new day, these were the highest probability levels that we had, right, all the way up to here. And then this was the last one. Now we have to go bullish or bearish, so a lot of the time the very top or the very bottom might get left, right? We will take, it's much more like the internal liquidity gets taken, and then we pick a direction, right? But because we were bearish yesterday, Tuesday was an inside bar, wasn't it? Tuesday an inside bar? Monday. No, we took the lower Monday. No, we didn't, because Monday was always down here. So Tuesday was an inside bar. Let's have a look. Yeah. Amazing. Okay, so Monday was an inside bar, right? So Monday was an inside bar. Now, a lot of the time, whichever side of the inside bar you take, you have a good chance of then taking the low. So let's look at a couple of examples. This is an inside bar, right? We take the high and we drive through the high of the previous candle. Let me just... Alright, so this is an inside candle, but it's too close to the top anyway. This is an inside candle. We take the high, we drive the top. We would have taken the low first, right? So we wicked, took the low of the previous candle, then took the high, closed above. No problem here. We took the low. We just missed the low of that candle, but didn't take the high. Here we possibly took the low first. Yeah, failed to take the low and then came up and took the high. Here we take the high of the inside bar and take the high of the previous candle. We take the high, leave the low. Take the high, take the high of the previous candle. Take the high, but fail to come that far up, but leave the low. Take the high, close above. So it's you know, there's a long way to go, so we might not come all the way down to here. This is quite a, if we look at the big ones, but it's now probably more likely that we don't take this level, right? You saw that once we'd taken the bottom of an inside bar on daily. It was more likely that we, and yes, I will build the stats so that instead of it just being, it's more probable, it's got an exact figure. We'll have that. I will do it. Because I hate the, it's more likely. How much? How much more likely? Let's put price label on that, right? I'll just put on chart. Let's go back. Just going to increase our liquidity level timeline just to reduce the noise. I had it on 5 minutes, I think, originally. Okay. So yeah, so there's our inside bar, right? So we've taken the low of the previous day, meaning we're not expecting this to go. It's not a lot of the time that we go. And there's a good chance that this low can go, but we're not potentially expecting to come all the way down to here. So I think this has got a good chance to go today. Does that all make sense? As you can see, I've just shown you practicality of it all. Drink my cappuccino. We can have some fun today. We could do some pocket options using the algo. What else can we do? We can trade. Can't really see much on Euro. The only thing I'm saying on Euro is that so here is last night, right, and this is where we closed. So we'll have to come back to this level unless we're going to open up with a gap, right? It's around there. Where's the exact price? It's the... I think it's that one, isn't it? About there. Actually, I could just switch it to regular trading hours and stop messing around and get the exact one. No, I can't because it's not futures. Let's put it on 6E. Oh, don't be like that. Okay. Yeah, there you go. So we need to come back to there before New York opens, otherwise we'll open with a gap. We can do this with a few other pairs. Let's have a look at NQ, see where the gap is currently. Okay. So we've got 20 minutes. Here's the previous. So we could open with a gap and just carry on. Carry on down. Possibly. Or you're in quite a strong trend, right? And you can see here how bearish NQ's been since we transitioned. Yep. There's the new indicator published last night for everybody. Free one. Really simply. Obviously, I'm sure you've used Super Trend before, right? It's exactly the same. The only difference is that you get this table at the bottom. Right. And you can see here, these are the two figures that matter the most. Right. This is telling us the success that when we get, let me just get rid of the other super trend. When we get a bullish cross here, what's the probability that when it crosses back bearish, that price is higher? So this is showing you that these settings on the daily for super trends give you a 57% probability that when it crosses, it's more likely to be higher, right? And then we can have a look at that on the 4 hour and see our 4 hour is 61%, right? So our 4 hour super trend is already giving us a probability that of 61% that when it crosses bullish, it's more likely to close higher. So you can adjust the settings in the super trend, yeah? And it will adjust the probability of the success so that you're not guessing, if you do use super trend, you're not guessing which one you think looks good, right? We can go through this and go, okay, well, I think that looks okay. I think that one looks okay. Well, actually, 61.75, I like that. That's good. And let's look at the average the average bullish move. So 234 points when it crosses. But if I go up to 2, you get 285 at 61%. 300 at 60.37. So I quite like that 2.2. Just gives me a little bit more distance. I know that the average move for when we get across is 300 points, right? And I've got a 60% probability that when it does cross and we get a bullish cross, that price is going to go that much higher, right? Wrong one. So obviously this isn't part of my strategy in Max Algo. It's just if people do use it, then, right? It's just a probability. It's a free indicator. You can go on TradingView, just search Max Algo, and it'll come up with the super trend for you. Obviously I've got a lot of other indicators on Max Algo, but you can see there super trend with probability stats. I think also we search super trend. It's super trend stats there, yeah. Super trend stats by Max Algo. Free indicator. It's just adding probability to indicators that people use, right? We go down to the 1 minute, you'll see that the probability drops 51%. So we're not getting a huge advantage. Is what it is. Can get it up to 53% on the 1 minute. Let me just adjust these settings. Yeah, that'll do. That'll do. That's close enough. So yeah, nice little indicator. It's free. Grab it if you want it. Let's get back to it. Just want to put this back on Euro. NQ. So new hour. 62% probability of being bearish. We get an early sell signal. Here's our low, our next probability. Let's just change that then to, let's go 2 minute. Yeah, there we go. So if we're going to go down, that's kind of where we're going to carry on a little bit further, possibly where we could go. We have just wiped out all the major liquidity inside of that, really, right? We've got this low that's gone, this low that's gone. So what do we do now, right? We haven't look at the liquidity on the way down. We've hardly created any liquidity. So if I go down to the 1 minute, we might have some liquidity on here. Yeah, there we go, right at the top. So we haven't generated that much on the way down because of how fast it was moving down. How's everyone's day been? You had a good day? Been okay? I hope you've had a good day. Well, that's just getting started. It's no good. Hopefully you're able to recuperate your loss there, buddy. Let's see how different. That's the same. Okay. Perfect. So let's try. I don't do this very often. But we're trying to have a little bit of fun today. Sure what we're doing here. Let's have a look. Right, so we've taken out all this liquidity. We've got an early sell signal, but we're only 60%. We have come under. We have done a little double tap, right? And then started going up. So I'd watch this long. Yeah, happens to us all. My cappuccino is cold. Man, that gold trade, what's that do? Schmooshed it. Very happy. So, probability-wise, we shouldn't take this high, right? It's not hugely in the favour. We don't have it massively in the favour, right? We have just transitioned, but we want to see this hour confirm that transition. I just want to check my stats on this because... Oh, there we go. Use real time frame. Repent, that's fine. Why? Yep. That's right. So we've transitioned, right? Because we didn't even get a weak bullish one. So we didn't get yellow, right? So here we go, orange, yellow. Now we transition into strong bullish, right? Here we've gone straight to weak, straight then to very strong bearish. We've only just done that. It's a shame this probability is not higher. Our 2 hour is 89% bearish. Let's have a look at our 2 hour. Let's look. When did the 2 hour start, right? Okay, so our 2 hour started up here. We've still got, yeah, 49%. So it's not huge. Obviously, these are the trades that I like to take, right? Put in a bottom, retrace, and then re-grab the bottom, double tap, whatever you want to call it. But we just don't have enough probability. We have just wiped out all these levels. We have just transitions. We are very bearish. It's not that I don't think we won't go down or can't go down further. It's just this hour, after a strong move, a lot of the time, we can just get that messing around, right? Finish the hour and then potentially drop. So New York opens in 5 minutes actually anyway, so it's going to do what the fuck it wants now. It's just going to go rah! You better mute me, Alexandra. You need to mute me. I want to distract. I am a distraction. So beautiful trade here, right? Turn that down. Get me gone. Beautiful, just beautiful trade up here. Oh man, I love a walk. Get out, fresh air. Forget about it. Yeah, I love a walk. You often see me and T getting out, putting our brains back in gear. So what was great about this trade? Let's have a little look, right? So we've been really bullish. Coming all the way up, all the way up, all the way up, all the way up. Right, we then tap our last liquidity level, right? Pew! Okay? So we tap our last liquidity level. Twice, so once there, close below. You then get your double tap, right? Which often happens, just sweep everybody out. Here's your strong move down, right? Before we get that continuation. So, here's your hourly low. So if we're bearish, we have to take hourly lows, right? So we're going to go down, we've got to take the lows of candles. Right, so we know this level is important for us. Right? So important level. We know we've got all this liquidity below. High probability liquidity. So we know they're there. We don't have to force it. We don't have to watch them. We can even hide it off our chart and go, well, I know they're down there. I don't need to have it on my chart. I just need price to show me it wants to go down. And how does it show you that it wants to go down? Well, the first thing it's going to do is, right, here's our bullishness. There's the last pullback. So on dynamic TP, takes the low. So price comes up. So there's your divergence, right? So price coming up. Dynamic TP going down. And then we take the low again, and we're really starting to kind of motor towards that level, right? Really starting to motor. When we start the hour, we can see we go straight away into a corrective bet bullish. So immediately the algo's going, right, time for a correction. We've got an 87% probability here that we're going to close bearish. So we want to look for then confirmation to be able to get in on this trade. So confirmation, if we're going to go down, we've got to take lows. We want to see the dynamic TP coming down to that zero line as well, right? And get that opportunity. We can see trend AI starts weakening. We get an early sell signal and we take the low, right? So we've now got probability in our favour that what? Price is bearish. Okay? So we've got probability that this is our high. We've got probability that price is going to go down. We've got probability that it's more likely the low's going to be further on in the hour, which means what? Dynamic TP is going to have to come down further. If it's going to come down further, it's going to do what? It's going to cross the zero line, right? So we're reading what could happen. We've taken out all our liquidity. So if we cross this zero line, that could be the beginning of price dropping down here. But we don't need to have to take all those levels, right? So, early signal. Price still moves down. Now you get your second signal. At this point, there's a 73% probability that this is our high. Right? So there's a 73% probability that this is our high. So then we can then just play the lazy boy setup. So we set our 50% and we're like, right, okay. We want 50%. Price comes up, taps the 50%, goes through the 50%. And now, statistically, we've still got 65% probability of more lows. Plus, we've crossed the zero line and we're bending round. Plus, we've taken the low of the previous hour, meaning if we're going to go down, we've got to take lows. Plus, we've taken all the liquidity above. We've got targets below with high probability. All I'm looking for is I can just look for price to take this low, take a high partial, and leave runners if I want to. Right? You're entering the trade without having to guess. I just want it to take all that price. You've got the highest probability of getting in without it hitting your stop loss. Go into a point where you can take profit, take risk off, and then let the trade play out further for you. And bam, within 6 minutes of being in the trade, it's done. Right? So, stop hit, or TP hit, partial taking if you wanted, done. Yeah! While I'm having a little rant, you're off there making money. And now we can put our liquidity back on and go, right, okay, trade done. I'm in profit. I've taken risk off now. So where's my next area that price could probably go to? Okay, I'll set my stop down here. I'm not going to be greedy. I don't have to come take these levels. You know, there's 94%, but, you know, fair enough. I might just target here, and this is where I want price to go. And boom. Job done, right? Oh, look at our high probability high. It survived. Right? Even the indicator put a liquidity level there to say this is the liquidity level. No liquidity level, right? No liquidity level. Liquidity level. It's a fucking great indicator. Tap that level, take liquidity, leave our hourly high, and let's go. Last target for the targets we put up last night. It'd be great to have a full sweep of every target hit. We've done all the others. I put it on every night on X. So if you don't follow me, jump on X. It's fexciting. You can go and have that walk now, Alexander. You can go and have that walk in profit, in the fresh air. Yes, yes. Now, I'm not here trading. Double profit. I'm not here, you know, putting things on you to say, like saying, I think it's going to go here. It's high probability. I'm showing you the probability, right? I'm showing you it. I'm showing you the probability of more lows. I'm showing the probability of a bearish candle. Everything that I'm taking is based off of statistical advantage. It's an absolute fucking dream. Yes. There it is, last target. Can we tap it? Come on. So we can put dynamic TP colours on, right? Let's just put the bars colours on. Look, we've been red. Look at that redness all the way through. Shite. It's not shite. So basically what happened was, I asked him if it was a daily candle. He said yes. Then it changed that it's not a daily candle, it's the New York Open. So it's the probability of the first hour of New York, which statistically it is high probability that in the first hour you get your high and low of the day, right? And I don't imagine that the data then it's probably close to that, maybe more like 70%. But it's no good. It's no good. It needs something else. It needs something else. It's fine as another confluence. It's fine as a thing to say, okay, well, this could happen, right? But there's so much volatility in the first hour of New York that a lot of times New York can go, put in its high, put in its low, and then we just sit inside the range. We just sit inside the range. And all it has to do is close above the hourly open. Below the hourly open. For it to, the statistic to play out, right? That's it. So the algo, it's basically doing a similar thing, right? It's giving you the probability of that candle then closing bullish. So if you then took the hourly data, so if you paired it, so the way that I would then make it useful is like this. Right? And this is the bit that they're missing. Let's get rid of our liquidity. Okay, let's go into regular trading hours. Change our hours to 7. And I'm going to put on 7 steps. Okay. Let's go up time frames. Just going to hide the lipstick on the chart. Right. So now what we have is, if we're bullish, New York taking that same set of data, right? So if we get the first hour closes bullish, then we have our probability, right? So you can see that we're breaking it into 7 segments. It's basically 7 hours, right? Where 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yeah, 7. So it's basically an hour, right? So we know that in the first hour of New York, there's a 69% probability. It's based on 130. That's because the indicator is not going far back enough. Hang on. to say it should be more than that. There you go. So 547 bullish New York sessions on NQ, right? So let's take that data. So if we're bullish, and if the first hour closes bullish, there's a 70% probability that that's our low. Right? So then it's just about playing what? It's just DR. So there's a 73% probability in the first hour that it's bearish, right? So you've got to wait for either side to get taken. I mean, obviously, if it's a bullish candle, there's a slight advantage that you would expect then that your low's in. So you could use it as that. But the only thing I'd say is, right? So we built an indicator that we've not published yet that looks at when the first hour's done. So I'll show you on here. So very much like this, green and early prediction, but using something slightly different, right? That uses the open price. We use the 50%. So when it closes above the 50%, a bullish candle, right? If price retraces to 50% of the IDR, so 50% of the hourly range. So if price retraces to 50% of the hourly range, there's a 50% probability that price will take the low. And there's a 50% probability that price will take the high. If it retraces to 25%, it's like a 57, slight, maybe 60% probability that price will then take the high instead of taking the low. And if we get to 25%, it's like 75% probability we take the low. So it depends. There's so much more to it than just that specific data, right? It's just very, very high level. And it depends on what's happening. So it's okay as an initial bias, and then you want to see your other confluences add up. And we can use that data, right? In our favor. So here, for example, right? Here's the open price. First hour's bearish. So you would expect a similar edge, right? We then go on and confirm long. We do close below the open price, right? Do close below the open price. So we do close bearish, but we don't take that low. So the only thing I would say, it depends on how you trade, right? If you're a DR trader, potentially that's giving you a potential false day, right? You're above the open price. Potential probability to close below. I don't know. You need to frame a trade with it. So like Lazy Boy is framed with the data, right? It's not just 80% probability of closing bullish buy. It's got a strategy to it, a reasoning behind it. You know, here's a bullish open. It did close bullish, right? It did close bullish. So maybe you're just looking for a reason for why it might come back up to this level, right? So if you see things starting to go bullish, like we cross over the zero line here, right? That could be a trade. So it just needs to be coupled with data. Here we're bullish, we close bearish, bullish and we go. Bullish and we're bearish. Yeah, it can just be dangerous. Sometimes you get that data in your head and you're like 80%, 80%, like, and then you end up taking trades that don't fit in. It's what, when I first launched Max, when I first built the algo, it was one of the things that kind of, I put too much on the algo, right? And it doesn't, it's about the specific type of sequence that you're getting, plus additional probability of those things coming together to give you the trade. So it's all right as a high level figure. I think it can be dangerous. But yeah. I have had a look at Edgeley. I did sign up. It's got some good data. It's all right. I just think it's practicality, right? So we've closed the open on Euro. The gap that was left, we've gone and filled. Let's have a look at NQ. I don't think we took that liquidity level. Wow. No. Right, so we've still got that level left that we haven't taken. We are now back above and retracing. Let me just turn bar color off. We've got a 46% probability of another low. 46 minutes. And we've got that level there, right? Feels like a tap to me. Feels like we might just tap. Let's see. Don't have to, obviously. Here's our open price. Wondering whether we took that level anywhere else. So ES came right down. It's still got a bit to go. It's looking nice. Right, very corrective. That was our last push down. Can't get back above. It's a very big drop though. I was looking at Uber yesterday. Don't know if anyone trades stocks. But I am very interested in a potential short on Uber, right? We've just come below the zero line on the daily. We're corrective bearish on the daily as well. So 1, 2, 3. So pull back, and then we might see that switch back bearish again. But the last time that we did this on the daily was a long time ago. Here's the crossover, right? And we go bullish. There's the last time we crossed under. And we did have a bit of a pullback, right? Similar level. 1, 2, 3, back. And then that continued drop. So I'm interested in a potential short in Uber this coming week. I am interested. We have just come down to this gap, right? Inside this gap. We've still got gaps further down. There's one down here. So Uber's looking interesting. Going to keep an eye on that. I think, you know, we could see we're corrective bearish. You'll see the data starting. We're up at 42%, right? So we should then start seeing the data come back to bearish, and maybe when we flip bearish, that'll be an opportunity to get in for a short and hold it. It'll be a long hold, right? A long hold. So yeah. Interesting. Interesting on Uber. So yeah, well out on that trade, taking your profit. We're back down. We're below the zero line. Always careful when we are making lows like this, right? We're strong bearish sequence 1. We've just tapped that liquidity with that wick, you can see, and then we're reacting off it. Still got levels below. We have come down quite a way. It's a shame though, because we've moved so far down, right? If we wanted to get a 50% tap, then price is going to come up to, it's going to have to come up to here. Now we could see a double tap on that, right? We've got a 90% probability bearish. We'd want to see that hold all the way. No change on the algo, basically. CL's bullish. Right? On the 1 hour. Strong bullish. We're already 51 minutes in, actually, so we couldn't be taking the gold trade anyway, because we are expecting a new hour. So we need to wait for this new hour to start. It is with the higher time frame, which is great. Right, gold's been bearish on the higher time frame. Correction. So we could see this low. I've been talking about this low for gold for a while. Obviously we transitioned bullish. We've now transitioned bearish. That's going to confirm. Right, nice transition bearish. Drop down. So you can see here we transition. We get a nice drop. So this could be gold's turn. Come take these levels. On to watch gold now. On to watch. Can't do that trade. We get a new hour in a few minutes, in 5 minutes. A lot of the time New York can come down and then start reversing. Doesn't have to do a double tap. This does look very corrective. We obviously run out of data now anyway. There's only a 28% probability of another low, so we're not expecting it this hour. We are expecting to have to see that in another hour, and we'll see the algo change. Dynamic TP has gone blue for the first time, right? So we are expecting a little bit of a pullback. Maybe we'll now get that bit of messing around. We'll see. We got very, very close to that level. Look at it. Okay, so we could be going corrective bearish now. This is our open price. So we tap the open. I know a few people who are going to be don't know, do you reckon? We didn't actually take it yet, right? Did we take it on MNQ? No, didn't take it on MNQ either. Got 4 more minutes. We are messing around that open price, so there's only a 62% probability of this hour closing bearish. That's why we don't trade it. It's not super high probability. We like to see at least over 70% for us to trade. Like we recapped on this one. Yeah, sell signal, tap at the 50%. I think we'll see Dodgy Dave on this one, right? Targeting this high. Dodgy Dave, yeah. He's only a young lad. He's an ICT trader. He's got a big following though. Obviously didn't have a very good day. I think it was yesterday or the day before when the price ran, but anyway. But we haven't taken anything. I'd love to see the liquidity that it's just, you can't just take any inverse fair value gap, right? I suppose it's a specific time as well, 9:30. We're not at 9:30 yet. Or is it 8:30? Am I on the Chicago time? Yeah, so let's put it back to... Yeah, so it's 9:30. Gold is currently our potential. CL, we've got another hour coming. Let's see what our new hour gives us. So we're going to look at CL and gold. Potentially NQ might go corrective bearish, would give us a high probability bullish trade. I only tend to just trade the sequence one of those. We are still very bearish. We've just transitioned. It's very early, but let's see. Let's see. We had a very strong last hour. I mean, the last hour closed without a wick. It's that strong. Opened, no top wick, no bottom wick, just a solid bar down. So it's interesting. Rah, rah, rah. Because I let that coffee go cold. Nearly dodgy, Dave. New hour. Still bearish. But again, very, very... You can see that probability just dropping off as the hours have gone on, right? It's because we're still not fully transitioned to bearish. It's because of that run up on Monday. But obviously this was our FOMC later. Yes, we've got news, haven't we, at 2:30? Is it 2:30? Yeah. Yeah, ideally, as I say a lot, I trade, you know, like if I was to trade, well, when I was trading full time, it was just mornings. I used to trade London. That's my favourite time to trade on NQ. But with the live streams, we like to come on when it's a convenient time for yourselves, right? And show setups, high probability trades, you know, how all the probability works, what we can do, all that type of thing. Yeah. I think you need to keep it to try and have, like, even if it's 2 hours or an hour where you trade, keep it fixed to that section. I think sometimes jumping in and out, it can be really detrimental, especially for your psychology. Because if you think about it this way, right, we're at work and then you're thinking about trading, you get an opportunity to have a look at the charts, you're looking for a trade, which is instantly in the wrong mindset. You're going on and you're like, right, I'm looking for a trade. And this has happened to me on the live stream, right, because I'm here to showcase trading. And it's that psychology of, I've got an opportunity, I don't get much time, I need to find a trade. And it's completely wrong. So I would, if you can, either have it where it's set, like, that's where the lazy boy comes in so good, because it's completely mechanical, it's black and white, you can only take the trades if they match up, right? So I would keep it to that, I'd keep it to lazy boy, and I would literally just either black and white lazy boy, take the trade, it's either in the rules or it isn't, or set time, you only trade during that time period, that's it. If it's an hour, if it's 2 hours, forget it, don't worry about it, it's fine. Yeah. And lazy boy has been great. Lazy boy is fantastic. Exactly. You know, and I always say, whenever me and T have traded, right? Whenever we've traded and traded mechanically, I've always said the one thing that you can do with a mechanical system, you can't take a trade because something doesn't add up. You can't take a trade that you think might be right. But what you can do is not take a trade. Right? I'll give you that leeway. If you don't want to take the trade, don't take it. But you can't get in on a trade unless all of those things align. And you do that for 3, 4, 5 months, your psychology, you get confidence in yourself. Like, I can do it. I can keep to the rules. Yeah, man. Exactly. It is a superpower. But I would challenge anyone. Challenge anyone. 3 months, just trade Lazy Boy, nothing else, exact rules. Don't break them. Let's see if you can do it, right? Because if you really want to be a trader, and that's your goal in life to be a trader, right? That's your freedom for your family. Well, you cannot go as a full-time trader if you can't keep to your rules. And if you can't even keep to a mechanical system that has no bias and no personal opinion, then how are you going to do it when you start adding in bias into your system? It just changes the game. And that's where the boot camp's going to push people. The boot camp's goal is to showcase profitability, but it's also there to kind of give people that opportunity to say, right, if you want to do this, you want to make money, let's make it really simple. Let's focus on the psychology, right? You've got to keep to these rules. And if you can't even do that for the next 3 months, then you need to question whether you can actually make it in trading or not, right? That's your first test. Past that, 3 months, Lazy Boy, just taking those trades. And I'd even showcase, like, depending on how much time you've got, 1 pair. So you're not jumping around different pairs. 1 pair. And it's done, right? Like, if this was your hour, look, trade's done. Trade is done in literally, it was tagged in here, wasn't it? 1, 2, 3, 4, 5, 6, 7, 8 minutes. Finished. And if you're on a prop firm challenge, here's what I'd challenge you as well, right? So let's say you're doing a 50k prop firm challenge with £2,500 drawdown. You're going to risk 250 per trade. That's it. 250. You're going to risk 250 per trade, and when you win, you're going to make 250. Simple as that. You either set yourself a minimum loss, and so here's your minimum loss. Either 1 a day, so as soon as you take a loss, you're done for the day, or max 2. If you go for 2 losses in a day, then your best winning day needs to be 3. So once you hit 3 winning trades, you're done for the day. You're finished, right? If you don't have much time, it's one losing trade and 2 winning trades. When you've hit 2 winners in a day, you're done. Lock it down, profit in. When you take 1 loss, you're done. Lock it down, finish for the day. You've got 10 trades. 10 trades to either fail or pass your challenge. You're either going to get 10 losses and you're going to fail, or you're going to get 10 wins and you're going to win. So I challenge you to trade Lazy Boy for 3 months and fail your challenge. But you can't trade New York Open. No New York Open. Too volatile for Lazy Boy. So gold is strong bearish, right? We're under, we've transitioned, we're expecting price to go down. We're 8 minutes in, next candle is 9 minutes. That means our first segment is up, and we're going to get our first indication of this could potentially be our high. So this is the 9-minute candle, right? We've already taken the low of the previous hour. What does that mean? If we're going to go down, we take lows, right? Boom, low taken. We're below the 0 line. We're below the open. The EMAs are bearish. Transition's bearish. Dynamic TP is bearish. Where's our liquidity? We got liquidity below. Now what we'd like to see, we want to see price give us the opportunity to get in. So we don't want it to run all the way down here, take all these, and then decide to give us an opportunity to get in. We want to try and have that opportunity to come. Right. So first segment. What's our first segment in gold? 1 hour. Bearish, 54%. Let's make it 10 segments. That means each segment is 6 minutes long. So at 12 minutes past, we get our 2 segments. 2 segments gives us 44%, 50%, 56%, not that much more. Segment 3, so 18 minutes past, that takes us up into like the 67% probability. There's our low gone, right? So we get an early indication. We get an early signal. We get an early signal. So that is our 10-minute signal, right? So 54%. Right. So I have a slight advantage that this is my high, right? A slight. Now, you can wait for the more high probable signal. We've still got this low here. We've closed below the liquidity, which I always like when we kind of go through the liquidity. We haven't done a double tap of the low. Our high is now above the EMAs, right? We've got an 84% probability low. We've transitioned bearish. I'm happy to take a... Got a 72% probability of bearish. Now, ideally, with gold, we'd like to see a little bit more time go by. We do get tagged in that trade, so let's just set ourselves up. Right. So we've got our liquidity below. So we don't have to take profit of the liquidity. Our 1R is literally just stop here, targeting the low, right? That's it. It's nothing else. We have come a long way down. And I am early. Oh, I've got it the wrong way around. Hang on. Okay. So this is the open price as well on our high, which is why I've just given it a little bit of room, just because we don't have a wick on the high, right? It's literally just an open, and that's the open price. So I've just given myself a little bit more room on this trade, and I am gonna look take a partial and see if we can run it down if it does come to target. So I'd look to do kind of this partial here, take the rest off there, or just again if you're doing lazy boy, then you're just looking for your 1R. get the trade done. So we kind of want time to play on a bit more. We could when that low goes, gives us another probability, but ideally, we are only playing. We've got a 54% probability, right, that the high's in. So we're not in huge probability. So on gold, the data that we've collected is on the normal system. So if you're trading gold on the Lazy Boy, we would put you on to trading the main signal just for the probability. Let's have a look at CL. So CL's give us a trade. We're above the zero line. So on CL, because of the way CL kind of moves, I like it on the shorts. So you know, on CL, when we're going short, I will enter the trade with CL rather than wait for a 50%. Then I would be in with CL and taking that trade. Longs, I kind of will look potentially for a little bit of a pullback. But yeah, otherwise, it's okay if you're in on this trade, right, with CL. CL's probability is much better. That would be your 1R up here. We haven't got much liquidity above. It's the only worrying thing I have with CL. But anyway, it's not in the rule set. Right, stop hit on gold. And we now get an early buy signal. It's not quite hit. So we put a loss on gold. It's a bit early. Ah. So the micros on gold have ticked one stop higher, as where obviously the main gold hasn't. So if we'd have been on the normal main contract, we'd still be in the trade at the moment. It's always a slight difference sometimes. Had that once today already, right? Where it just got the target and then ran straight to profit. This will be even more annoying because it's obviously it's the micros. So if it runs to here, if I'd have been on just GC on the main, then I wouldn't have been taken out. Pain in the bum, but it is what it is. We'll watch that now. We're done with CL, so we're done with gold. Yeah. So NQ up to. So NQ still bearish. I hate this period of time where we just sort of mess for a bit. Price will get cleaner as time goes on. We have got some levels above. We've still got our levels below. We'll wait for the algo to come good. This was the trade, the other loss I took today, right? Here in this hour. Confirmed. Just took the low, straight off the target, right? Here. So there was this loss. So that'll be 1, 2 losses today. And 1, 2, 3, 4, 5 wins. So we are, what are we up to now? Yes, that took a bit off. We were over 2,000 up today. Let's have a look what it was. So yeah, 300. We were 2,331 up before the gold trade, and we are now so we're down 300. So here's our P&L for the day. So we were 2,330. We're now at 2,000 after the gold trade. If we'd have been trading a different contract, we'd still be in. That's so annoying. That is so annoying. Oh my god. Can't even make this up. Don't you dare go to Target now. Don't you dare. Right, so it's just this wick difference. You get up there. Take that stop loss. Oh, amazing. We've remained bearish on the algo. If you've noticed that the algo hasn't changed. Even when we pushed up here, right, we still remained 72% bearish. Pain in the ass. Get up there. That's it. Spare me the pain. ES is off. ES has gone to corrective, right? So ES, we can see now is corrective. And we're coming up to that zero line. So I like ES. Even like the correction point as well. We got a bit of time, so we've got 76% data above on the highs. 79% of highs yet to come. Just if we will get time to get tagged in on this one. Yeah, we didn't take this, so we didn't take our trade on CL. We took the gold opportunity. Now we're looking at ES. See, now we've flipped back bearish. So can't take that trade. That's gone. No trade on there. We're still bearish on NQ. So you can trade depending on how much you want to risk, right? So if we're on NQ, if we're trading one contract on NQ, then you've got 50 ticks, right? So 50 ticks is 250. So if you've got a 250 limit per trade, right? That means you've got 50 ticks. 100 ticks is 500 with one contract. So you'd have to be on MNQ, right? So if you were going to take let's say this trade, right? Because this was actually a setup. So you can see that it's 58. So it's just past one contract. So you'd be going in there with like 9 contracts on MNQ. And I like the MNQ side because then if I want to take partials, I can take the partials and drive it through. Okay, so if CL, we want to, if NQ now breaks this low, that'll be a good indication of driving for the lows. YM's come above the 0 line. Strong bullish. We get a buy signal. 50% on the open line. We have just come above. I would take that on YM. Let's have a look. Fuck you, gold. Absolute arsehole. Oh, Algo's changed. So you see here the Algo's corrective bullish as we're heading towards our target, which means we don't take the trade. So no trade. So if you were in that on the main gold, you are at the opportunity where you can go back break even, or sorry, you can get out the trade, break even. Painful loss, that one. So with the buy signal, I would have been out break even. Should have been 1 tick above probably anyway. Do. When you get these big moves, right? We get these nice big moves and they come down. And then we're always going to put in a period where prices are going to be a little bit more corrective. Or play about for a bit, right? We come down, we play about for a bit before we then continue. Like we come down, play about for a bit before we come back the other way. When they're very strong, and that's a very strong move. We've already taken the high. So we've taken the high of the previous hour. Not quite yet at that zero line, but we're heading towards it. So if you did take that YM trade, you literally hit TP immediately, right? It's a shame that Algo was just changing. Right? So you'd have got tagged in there, and then you'd have got, oh no, hang on. No, you wouldn't have got tagged in. Yeah, so it was just too far. If it was 105, I had 105. Anyway, back strong bullish again. We are expecting this now maybe to hold. I'm on the 2 hour. No, I'm not. I'm on the 1 hour. It's just half an hour. That's right. So if we switch to regular trading hours, that'll make sense. Right. It's 1 hour. We're now bullish on this. Same thing. Sorry, my daughter. We're very bullish. Coming up. We got half an hour. Not looking super strong, but on the bullish side. But we got half an hour. ES is coming up to that zero line. So ES is much more bullish, right? Proper V-shaped recovery. Absolutely disappeared. I like this trade here. That's a nice trade. If anyone caught this trade here, that is a nice trade. Switching on the highs. Tap back in and go. It's a nice trade. NQ. Just not pushing as much, right? You. Still bearish. We got half an hour to go. So in the last half an hour, right, let's have a look at our data. So this is our data for gold. Okay. So if we are going to be bearish, right, we can see that the data weighs up in the last half an hour. If we are going to be bullish, then we can see that we expect the highs to be in the last half an hour. So if I just put it into, I'll put it into 3 segments just to make it easier. So these are 20-minute segments. First 20 minutes, second 20 minutes, third 20 minutes. So you can see in the last 20 minutes, we expect the high and we expect the low. So if we were to look at that and see what that looks like, right? So that looks like here. That's our 20 minutes. So think of it like your distribution. So a lot of the time we'll put in our high and low around the first 20 minutes, which would be there, right? So what's the probability of us going bearish? The high being in the first 20 minutes, 70% and 75%. So right now we've got strong probability for either. That's not given us much on the high and low. The algo's given us the probability of more likely to be bullish, right? So if we're more likely to be bullish, means we're more likely to have a bearish candle. If we're more likely to have a bearish candle, then we can expect to see our low. So our low is currently in segment 1, which is only 12%. So we would expect to see that low happening now, right? We start moving into that distribution point and we expect to see that low happening now. Now, this could be a reversal point. For a candle to be bearish, it just needs to close below the open, right? So this is our open price. We're currently below. It's currently a bearish candle. We don't have other... We've got a couple of bits of data on our side, right? So we've taken the previous hour. We're closing below the open. These are all bearish things. And then all that we're using is the majority of the time when we are going to be bearish, we expect to see that low. But if price is bottoming him out, then we'll see. Maybe we'll get a tap of that low. We've still got the liquidity levels below, right? So we've still got opportunities to tap. We have transitioned here to bearish. So we do expect some continuation. Doesn't mean after a strong move down that we can't have a little bit of playing around and then a continuation. But right now, this hour, all favours towards being bearish. And if it's all favouring towards being bearish, probability gives us that this is where we see our low the majority of the time. It doesn't have to be all the time, just 57% of the time, this is where a bearish candle low is on gold. Right? But it's also 58% of the time where we see the high. So if this is going to go bullish now, and we took the high last, right? So we took this high last. That would give us a slight advantage to the bullish side on the candle formation data. Yeah, very much like this, right? Bearish candle. Here's our high. Here's our low. Last 20 minutes. First 20 minutes. This is just being a bit messy. But we have gone green. We have gone blue on dynamic TP, right? So that trend down, you can see then finish there, which gives us that warning sign that actually that drop down might be careful now. We'll see. We shall see on gold. We'll keep watching. ES is still flying away. CL. Nice structure. We couldn't take the trade on CL, could we? Because when we retraced, the algo changed. So when we were looking for 50%, right? We were here. We were looking at potential 50%. Let's have a look. Oh no, we could have taken it. It was this hour, wasn't it? We're in a new hour. Okay, so you could have taken this trade on the lazy boy. You'd be on your way. NQ's getting close to the zero line. Gold has retapped the open. This is the 9-minute candle, so important this candle. Seeing this close above the open will be a big indication. Closing below is another indication as well. So let's see. We've got seconds left. If it closes on it, then that's unfair. It closed on it. Yeah. Let me tidy this up. Right. So we had our trade here. I think we were about there. The entry, I think it was. We're in the last 20 minutes. ES is just motoring. Gold's messing around. TL's messing around. NQ starting to just creep up. We're coming up to that zero line. I think. Oh, okay. So ES, right? Gone bearish. So ES has gone bearish, transitioned under, had that nice move down, grabbed all that liquidity, flipped back up, gone bullish, and we're starting to transition back. So could be a good indication that we could go and have a good rest of the week. Have a strong rest of the week, but we'll need to see that complete that transition. It's not even. It's just flickering, so it's only just starting. Not complete. We got the gap on NQ, haven't we? So we just come out to the gap. Is that what ES has just filled? No gap? No gap on ES. I got this wrong on there. Yeah. Oh, hang on. So that was the gap. That was filled when we opened. Bit of a boring hour, really. CL taps what would be the 1R. above the 0 line, strong bullish. GG, well done. If you did take the CL trade on the Lazy Boy setup, well done. If you took it on the buy signal here, oh yeah, we spoke about this, right? And 1 hour would have been hit, right? There we go. So either way, both trades would have been done. Here goes NQ now. Coming up to that 0 line. Looking like we're starting to... This is where when we cross, remember that we can get that volume that kicks back in. ES is just motored. If you have a look at that on a higher time frame, let's have a look at it on a 1 hour all day. Look at that wick. It's that. Boom. Tap. Drive back up. That's that. That is the wick. Oh, shame we couldn't get in on ES. That's a nice run. There we go. Well, we'd have been out on break even, but either way. I was meant to be looking at YM, aren't we? It's 94% strong bullish. YM's gap, still got a bit to go. I like the look of this on YM. Really strong push, transition, all the higher time frames bullish, strong bullish in line with the higher time frame as well, right? 94%, 50% within the EMAs. So I like this. I like it. So we've done our first 10 minutes, right? We've taken the high the first 10 minutes. So if we're bullish, we can see that 60% of the time, our low is in the first 10 minutes. So because we've just swept that high there, that means that it cannot be. So we've got a nice advantage that this is our low. So it's an early signal. But better data than gold, much better data, right? Gold we had 54, we got 60% on YM, which I like. Whether we'll get the tap in is another question. where the price, there's the buy signal. So we'll go on a one-to-one on the buy signal just with less contracts. On our one-to-one. Do, do, do. Like NQ as well, how long? Crossing that zero line. We've got 10 more minutes of NQ. Now looking for longs. Everything's gone corrective bearish. Look at this, right? 3 hour, 2 hour, 1 hour, corrective, corrective, corrective. So just looking at the 2 hour, right? So 2 hour has started now. 3 hour has started 2 hours ago. There's another hour of that. So probability is that, you know, we still got good upside. We've come over the zero line. Yeah, it's a good opportunity, right? It's a good opportunity. We look like we could starting to weaken as well on the transition. If we could just transition bullish as well, it could be a nice trade. We'll keep an eye on that. Gold still bearish. We're still the algo's predicting we close bearish, so we just got to close below the open. That close below the open, it's like an 82% probability now that gold closed bearish this hour. So 300. See if we can get tapped to 50%, add to this. Seven more minutes. Get rid of this now. We just need to see this hour out, see where we stand on the next hour. Euro's gone. Nice sell signal. So So we go below the 0 line. You got 95% probability of being bearish. Sell signal. Bang. You'd have had an early confirmation if you trade DR as well, a wick. Tap back to the open. Could have been a great trade if you're in on that. Nice confluences for that trade. I like NQ. Waiting for that one though. ES has got up into the liquidity. So in the Discord, there is there's the PDF still in Discord. I think the PDFs should still be in the Discord, and on so right now on YM, we've still got a 81% probability of more highs, right? So our stop currently sits at 73%. So 73%. So we expect that low. You join through the what? I'm sure I've sent you the what link. Just put the what link on for us, T, will you? I'm sure I didn't I give you it on Twitter, Nico? Right, we got a new hour coming. I don't like it when CL and... Yeah, you have to pay, yeah. Yeah, it's not free. You can join the... when I do the boot camp, you can join the boot camp. That'll be 14 days free. We'll be going through Lazy Boy then, but it's still a... If you want to use the algo, which you need to use for Lazy Boy, then you need to pay for the indicator. So all the back tests that have been done have been using very simple... ooh, look. The new indicator. Gone bearish. I'll show you how it works right now, Rico. You ready? Really simple. Really, really simple. Let's clean the chart. Let's make it really clean. Okay? You need to mark out an hour. All these orange lines are an hour. Obviously, our indicator does that for you automatically. You need to get a sell signal, an early on NQ, an early sell signal, or a main sell signal. Okay? Let's replay the chart here, as this is a Lazy Boy I took. So, Let's just focus on these two things. We get a sell signal, right? This is our hourly algo. What is it predicting? It is predicting here there is a 12.23% probability, right, that we close bullish. 515 times 12.23% close bullish, meaning 87% of the time we closed bearish. We closed down. So when we get the sell signal with the algo, that probability needs to be 70% or higher in the favor of the direction of the trade. So it absolutely is. So we can set our fib, right? And go, right, we're going to want to take our trade at 50%. So we set our limit order at 50%. Now, as long as at the time of the entry, the algo is still matching the direction, we can still take the trade. As long as the bearish probabilities, which are here, I'll increase the size. Right, so we're bearish. We're 87% probability bearish. We're looking at bearish probabilities. So right now, there's a 91% probability that there's more lows to come. There's a 44% probability that our high is currently in, right? Right, we get a second, we get our main sell signal. At the point of that signal, you can see there's a 65% probability that our high is in. So now we're going to move, as price comes down, we're just moving our fib or our box just so that we can get 50%, right? So here's 50% of price. Here's our stop. Forget the fact that we're targeting some liquidity below. We're looking for a 1-to-1, dead straightforward. Right? Tapped in on the trade. Algo is still showing us high probability of bearish. We still have a 78% probability of more lows. What does that mean? At this point in the trade, this is our stop loss. This is the high of the hour, right? Here's our hour. This is the current high, that wick. What's the probability if we're bearish that this is the high? 78%. So there's a 78% probability that price now will not take that high. Okay, so we need price to go to our profit target, which is this low. What's the probability of price going to the low? Right now, there's a 78% probability that price will go to the low. And a 65% probability, had it the wrong way around, that price won't take our stop loss. It's a 1-to-1 trade. 1-to-1. Where's profitability? Anything over 50%, right? As long as we're winning more than 50% of the time, we're profitable. So right now, when you take this trade, you've got an 87% probability that we're going to close bearish, right? And you've got a 78% probability it's going to go to your profit target, but you've only got a 35% or a 34% probability of it hitting your stop loss. So then price moves on. TP, job done. Trading with probability. Simple as that. No opinion. No guesswork. Algo predicted bearish, higher probability. Signals confirmed bearish hourly structure. Tap to the 50%, tap for the new low. Now, forget the fact that we had additional targets. That doesn't matter. Right? There's your high probability trade. Job done. And that is the lazy boy setup in the most basic, the simplest form. So then you can add other confluences in, right? So here's the previous hour. Here's the previous hour low. If we're going to go down, we need to take lows. There's the low of the hour. We wait until we take that low because we've been taking highs. We take that low. We get our sell signal. So we've got another confluence, right? We're also closing below the open. What's the probability of price being bearish when we close below the open? Well, if you're a Max Algo user, all that you do is you load up your open stats, right? And change from this to close below the open. Okay. So here this is showing us on an hour, when we close below the open, what's the probability then that the hour closed bearish? So we've had one segment, two segments. So by the time we get the sell signal, we've had two segments. So at that point, there's a 69% probability the hour's going to close bearish. Let's just tick our confluences. We're below the open. By the time we get our sell signal, we're 69% confirming bearish. We're 87% bearish on the algo. We just took the previous low, right? What's the probability when we take the previous low that the candle closes bearish? If you're a Max Algo user, no problem. Let's load up that. Right, so we took the low of the candle in segment 2. So we broke the low in segment 2. When we do that, there's a 75% probability of closing bearish. Let's just tick up our probabilities. Below the open, 69%. Taking the low of the previous hour, 75% of being bearish. Current probability on the algo, 87% bearish. Tick, 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 tick. Not confluencing, I think price is going to go down. It looks like it's going to go down. None. Stacking probability, one after another. So even if you're not using any of those, and you're just using the algo, and you're just using the 50%, you're looking still at like a 71, 72% win rate with a 1R system. It kills it. You can then increase that probability by adding in more probability confluences. Have we taken the previous low? Right, there's 75% probability of being bearish. If we're going to be bearish, where do we expect the high and low of the hour to be? Great. Let's load up that data. Okay, so if we're bearish, there's a 52% probability our low is in the last 20 minutes. There's a 65% probability our high is in the first 20 minutes. Let's just put that together. What does that look like? It looks like this. This is where we expect the high of a bearish candle. If we go up to the 5 minutes, increase our data, 70% of the time, we expect the high in the first 20 minutes. 56% of the time, we expect the low. In the last 20 minutes. Right? Last 20 minutes. We're entering here. We've got all this data for where most of the lows happen. So we expect our high here, we expect our low round here. As that's how a bearish candle forms. Right? That is lazy boy. Simple as that. You're using probability and the algo to give you your setup. I hope that explains it as clearly as possible. Gives you an insight into trading with probability with Max Algo. How we've stacked so many confluences together, right? So right now, what's the probability? We're still corrective bearish, so we've got a we've confirmed short, right? So we can't take a long because we're not getting that stacked probability. Have we taken the high of the previous hour? No, we haven't. Did we close above the open? We just did close above the open, but it was only in the first segment. So that gives us a 63% probability of being bearish. But we've just taken the low. We've taken the low in the first 10 minutes. Which means if we're going to go bearish, there's a 45%. Let's go up time frames. Just increase the data. There's a 54% probability right now. This is our high, right? And if we were bullish, that would mean our low is in segment 2. Oh, there's only a 15% probability our low is in segment 2. So therefore, we've got mixed signals, right? We've got above the open, initial bias bullish. We've got a bearish confirmation on here. So until we get a full buy signal, until the algo's confirmed, until the other things are confirmed as well, it's no trade, right? We wait for that all that setup. Wait for it to all come good. Does that make sense? Any questions? What do I mean with the segment? Of course. Absolutely. I've just been doing a video on this. Oh no. Did I delete it? Must have. Okay. I'll just do a bullish example, because then it'll make sense. So this is a bullish hour, right? Just gonna lay it out a bit cleaner. Okay. So let's say this is 1 hour. Right? And that's made up of 60 1-minute candles. All right. Yep. Okay. So 60 minutes in an hour, right? So if I want to know where the high and low is of an hour, I want to know what time during the hour is that likely to be, right? What time is that likely to be? So we take a segment. A segment is a piece of time. So we just break our hour up into segments. So we take the beginning of the hour and we put it into our end of the hour, right? And then we've broken our 60-minute segment into 6 segments on this example. And let's draw it on. Where is it? 1, 2, 3, 4, 5, 6. Right. This is 10 minutes. 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 So there are 6 segments. Here's your 6 segments. first 10 minutes, segment 2, second 20 minutes, segment 3. And then what we've done is defined, all right, so the last 927 bullish candles, where was the high, where was the low? And you can see there, the bullish lows were 59% of the time in segment 1, and the bullish highs were 44% of the time in segment 2. And all that we use, the segments, so whatever data we're collecting, whether it be highs, when it happened, when we took the high of the previous hour, we look at what point during that segment. So it doesn't matter whether we then go up into higher time frames, right? So we can then go up onto onto the daily, yeah, and break a day up into 6 segments and look at the same thing. We could go to 2 hours, 3 hours, 4 hours, 5 hours and look at the same thing. We could go into minutes and look at the same thing and say, let's look at a 10-minute candle. So gives you the ability just to go through everything really and have a look at what it is you want to do. So that's segments, right? So ES tapped that liquidity, it made it up, and now we're coming back down. We got our liquidity levels, right? We hadn't quite taken this level yet, so we've come down, fiddled about. Could be the point now we just come down and take this level. When we were looking at the inside bar, right, remember? The probability was that we don't take this high, we're more likely to carry on bearish, because the last day, yesterday, was an inside bar on the daily. So, where is it? If I use this on the daily, it'd just be easier to see. Right, so it was an inside bar, and we took the low of the inside bar there. And when we do that, it's more common that we then don't take the high. It's quite far away. So what we were talking about is, you know, maybe it's not likely that we come take this low, but we could come back down and take our existing low that we've put in. So yeah, so that was just looking at like here an inside bar. Here's another example, right? We did this at the beginning of the stream. We took the high and then we drove through the previous candle's high. So it's just showing that right now, today, based on us taking the low of that inside bar, we don't expect this high to go. It's not as probable. That's why we're assuming that at the moment. No. No, you don't know. You don't need a paid membership. It just means that you can only use 2 indicators, right? So the 2 indicators you use are the Algo and the V1. That'll give you the signals, and then you've got the Algo. That's all you need, those 2, nothing else, for the basic setup. And we tested that, just like the data's in the Discord, but you know, November was 72% win rate just using those 2 confluences, nothing else. Back below the 0 line. We'll confirm short once we take this low. We had an early signal here, right? Nice early signal. We've taken the low of the previous hour. Right? So So bearish, confirming. We've now closed below the open. We've taken the previous hour. Tick, tick, tick. We're red. We're going under the 0 line. Our trend AI, right? Never changed red. We now get a sell signal. The algo's not above 70%, so obviously we don't have that in our favour. So it's not a true lazy boy if you're following the rules. But it is looking like we should drive for that low from last night. CL. So we could go. CL's taking the rest of that liquidity. It's still bullish. 74% above and bullish. So just look at the difference between NQ, right? Look at the trend AI has stayed bullish all the way through. Very strong, right? NQ has transitioned, gone bearish, struggled to come up. Yes, we came above that open line, but didn't get that volatility kicking in to take the liquidity, and are now going back under, meaning true direction, more likely that we're going to come and take this low. We don't have the algo on our side. Everything else is still bearish, but well, we have got the algo on our side, but we don't have as much high probability. So yeah. Is it what's Nasdaq on Awanda? Is it cash? I used to use 8cap, but can't remember what it is on the CFD. There it is. Yep, there you go. Get a lot more data on Awanda. You can see we've got 1,284 candles right now. This is a sequence 1 on Awanda. So I can take this trade on Awanda. Right. So, Nico, all the plans on Max Algo are lifetime licenses. So, rather than you paying monthly and it forever paying monthly, you're always working towards your lifetime license. So you either buy the lifetime license up front and you get a discount for doing that, or you can spread the payment over 3 months, or you can spread the payment over 6 months. Either way, when you complete that payment, the Max Algo is yours for life. All the updates that we do, new indicators, all of them will be included. So it just means that you know each month when you're paying, you're not just paying for another month. You're paying towards that value of having it forever. Yeah, we did have a monthly one, but I was like, you know, you're gonna like, what if someone's with us for 2 years, right? Like you're gonna be paying every month for 2 years. I was like, no, let's have a value that we're happy with. That when people get to that point, it's like, boom, it's not another cost every month that you're having to pay in trading view and everything else, right? Yeah, I wanted to make it so that it's like fair value, right? You give fair value to us. And we got news, haven't we? You give fair value to us, and at some point that means that you can then strike it off your monthly costs, and you've paid the, you know, a fair value for the indicators. So that's why we moved to that lifetime. So it was just everyone's got the ability to pay off. Thoughts on the Lazy Boy and NQ? We got news, haven't we? Isn't it news coming up? What time's 2:30 news? Isn't it? Where's NQ? So on NQ, which is the futures, it's obviously it's not a Lazy Boy, right? Because it's below. On the CFD, it is. So I was like, oh, do we cheat it because of that? I like it. I mean, I do like it, right? Because we've come back above that zero line. We're below zero. We've still got liquidity below. You know, I do like it. But let me just check news, because we've got news as well. What time is it? It's only 11:30, so there's still plenty of time. News is 2:30. Yeah, it's going to be the last trade anyway, so let's put it on 295. Algo's holding up. We'll say it's based off of the CFD, right? What's the 295.50? 295.50. It's a bit messy because we got news beforehand, but decent sell signal. We've taken the low of the previous hour. We've got liquidity below. Let's see if we can ride out ride out the stream with a profit. If not, then that'll be it done. Sod's law, right? I've had the most amazing morning. This is why I trade morning, right? Just beautiful morning. In the Discord, there's a back test of Lazy Boy. So the 2 hours, I think it's... This hour's okay to trade, isn't it? I think, T. It was the hour New York and the hour after, or the hour before. Can't remember. There was 2 hours that we were taken out of Lazy Boy for NQ. Sure, it was definitely New York Open, and I'm sure it was the hour after. Can't remember. It's in the Discord anyway. Confirming. NAS 100, wasn't it? Oh God, where are you? Wanda. Right, okay. 30 minutes before and 90 minutes after. It's a bit of a cheat, this one, isn't it, really, T? It's a bit of a cheat because it's based off of Wanda, and the backtest is obviously based off of futures. So really, shouldn't really be taking it, because if it's based off the futures doesn't count. So the rule is, you shouldn't be taking the trade. That's what I'm going to say. What do you think, T? Yeah, yeah. Oh, don't start flashing. What was NQ on? Still bearish on NQ. However, it's Christmas. Yeah. Nice stuff. Who's... You talk about tea? He's alright. Oh, man. So, 200 risk for me on this trade. That'll take me below the 2 grand profit I've made today. Or it'll take me back. Now, ideally, obviously, if I wasn't trading on YouTube here for you guys in terms of doing that, I'd have been done for the day previous. Punching my screen. Shh. Know your place. It probably couldn't hear you because your throat's bad anyway. You got that cold. Dr. Henry, you have made my day. Made my day. Absolutely made my day. We try to employ the nicest staff that we have. We want to make sure that customers and people are treated right. It's really important to us. Having good people around to look after people is really important. T's a great guy. So what do we say? We've still got a 71% probability of another low. Right? Where's our distribution in the last 20 minutes? Still got plenty of time. We've had 2 signals. We've taken the low of the previous hour. We're closing below the open, right? Here's the open price. So segment 1 closed above, segment 2 closed below, segment 3 closed below, and segment 4 we're due to. So we want to see segment 4 close below. So segment 4 closing above would be a worry, right? So this is a concern if we close above the open. Right now we want to see that close below. That's our first concern. We have gone blue on dynamic TP, but we are still below, and sometimes we can just get that little correction below before we get the continuation. We want to see that 15 seconds now failing, right? That 15 seconds starting to fail and go bearish and not take us above. But we'll watch. We have passed the half an hour mark, right? So we now move into mostly where we get our distribution. So bearish distribution, you can see it's 8%, 13%, 7%, and then we go after half an hour 18%, 17%, 34%. So we expect most of our distribution coming to this point. So we are at a point now where we're expecting either to have high or low taken. We are 6 minutes getting to that open price. Oh, Algo's just starting to flash. So there is a probability that when we take the low of the previous hour, that we do come back and tap the open. That's not an unreasonable thing to happen. We just don't want to see it close above the open on the 9-minute candle. So just before this blue starts, we do not want to see that close above the open. So if you join me on the boot camp, right, we wouldn't be taking this trade. Just put a name out there, right? If we're trading the boot camp, we're trading this probability, and that's got to be above 70%. We've stacked a few confluences on this one though, right? We've taken the previous high, previous low. That gives us probability of being bearish. We've crossed over the zero line. That gives us probability of being bearish as well, right? So we're stacked a few other confluences, but our probability for our true lazy boy setup isn't there. What I would suggest, Nico, is you back test a Wanda, or use NQ for your confirmation and just enter the trade on Awanda. So 8-minute candle. Next candle, we do not want to see close above. Did I call it Ladyboy? Ladybody. Yeah, Nico. I think it's only fair to kind of use the if all the data is based off of the futures data, then it's best to confirm it from that. Unless obviously you just spend the time just doing it on Awanda. Did I say ladybody? I did not say ladybody. I did not say ladybody. I did not. No, I did not. I didn't. Will someone tell me, did I say ladybody? I can't rewind the stream. Right, close below. I did not say ladyboy. Ladyboy? I didn't say ladyboy. That's ladybody. Ladyboy. It's ladyboy. I'll clip it for you. I've just changed the nickname of it now, haven't I? Oh my god. I apologise. Meant to say lazy boy. So we do close below the open. And we get our tap, or we just don't tap the open. Probably, it kind of counts. It'll be a tap of the open, that, because it's to the tick there. So, yeah. So we really want to see price go down now. This is where we want to see price heading now down towards our target. This is where it needs to happen. 15-second did come above. Oh. It's not looking good. So if we look at this lazy boy trade here, right? We come up to the 50%. The 5-second comes back below the 0 line. Gives us that continuation. So we need to see the 5-second coming back below. It's struggling. It's starting. Got a nice trend line on the 5-second. Let's hope we can break that and break down. I cannot even remember. As far as I'm concerned, I said it right. A ladyboy setup? I've never taken one of them before. Video evidence. Oh man. Caught on camera. We have got it's a big red folder news day. How's it going? I had the greatest morning, absolutely killed it, been brilliant, and then New York opened. And we have got news, I know. But yeah, this is me trades this morning. Then we had me profit targets, right? And then me low profit target. And just smashed. It wasn't like that actually, sorry, just to put it on. This was this high here. This was this high. Yeah. This was I think I took that one. This was a failed lazy boy. Just took me out and then went straight to target. This was the last level liquidity. These are all zeros, right? So took a short here and targeted these lows for that trade. And then we had a lazy boy setup. Oh, no. It must have been these lows. Sure. No, it was be them. Lazy boy hit at the same time. And then we had a lazy boy set up here, which we took. And we smashed target there. So that's all been good. And then New York opened. Now we shouldn't really be in this trade. We're cheating on this trade, so it's bad trade. Because we were below. We'd come above, come back below again. It was like going back bearish. Dynamic TP still, trend AI still bearish. We took the previous hour low. We're closing below the open. So we used some additional confluences, not just the algo, to take the 50%. What? You can't post it. Huh? Where? Oh no. I bet you've tagged me as well. Oh, I'm going to have a look. Right, where is it? Have you put it in the Discord? This is unfair. This is bullying at the workplace. I'm going to report you to T-Bone HR. It is. It's in the Discord. Hang on. Hang on. Hang on. Right. Stacked a few confluences on this one though, right? Taking the previous high, previous low. That gives us probability of being bearish. We've crossed over the zero line. That gives us probability of being bearish as well, right? So we're stacked a few other confluences, but our probability for a true ladyboy. It did say ladyboy. It's there right at the end, yeah. Stacked a few confluences. No, you don't have to play again. Right? Taking the previous high, previous low. That gives us probability of being bearish. Stop. We've crossed over the zero line. That gives us probability of being bearish as well, right? So we're stacked a few other confluences, but our probability for a how do you clip that? True ladyboy. Ladyboy, go away. A true ladyboy setup. I apologise. Did not mean to say that. Meant to say lazy boy. Not ladyboy. Although they are T's favourite setups. He's very good at it. Ooh. Thanks for that. Very nice of you to share. We still got 52. It could be incriminating, exactly. It's proper bullying, that is. Can't hide anything, can I? And I am terrible for saying the wrong things. Terrible. Not like the wrong things like purposely, just completely intentional. I'll just say the wrong word. Especially if it's very similar. Oh, terrible. You like Lazy Boy? You do like Lazy Boy as well. Thought that was the wrong word then when I was reading it. I was like, you're saying it now, aren't you? Oh, not liking the look of this. Oh, okay, well, there you go. So, I mean, segment 4 has closed below the open. That's like 84% probability closing bullish. But dynamic TP is great. There's less probability now of a low. So we know we do what we do. End of the hour, we move stops to break even. We will look to get a retracement. See if we get the trade out break even. Ay, ay, ay. The CL is a true lazy boy trade, right? So CL, you'd have been tagged in there. I'm gonna have to, every time I say it now, I'm gonna have to fucking think about it. You'd have been tagged in there. Stop targeting here. You've got 9 minutes left, so we'd be waiting for this hour to end, right? And then we'd be going break even. So right now, if you're in the, you got bloody close though. Look at that, right? Tagged in here, almost straight to target. I mean, you might have used a smaller stop as well. Could have used potentially a smaller stop. At which point you'd have been done anyway, right? So let's see, CL, that is a true lazy boy trade, as it was in this hour as well. So there's one. Let's see if 2 plays out. NQ, let's see what we get with NQ, right? We've got a little bit more time yet before we're going break even. We go break even at the end of the hour. We've got 8 more minutes, 7 more minutes. It's not looking pretty. But yeah. Everyone's going to have to get up early. We're going to have to get up early and trade London. Or I'm going to have to stay late and trade later on. Like now, sort of this sort of time, the next sort of 3 hours, tend to find a setup. It's usually like 1 or 2 good hours. I tend to find a clean setup in. No. Maybe. Here. Crossing that 0 line there, right? Bearishness. I don't think he'd have... Would it have been 50%? Ooh, let's have a look. Right, let's see whether the algo would have been in at that time as well. Oh, it's just shy. So you would have got tagged in at the 50%. It's 30.89. So it's smidgen. And then bam, there's your 1R. That was the last signal, and then we've had a sell signal now, but we are I've not got the data on that one, so yeah. Don't think that would have tagged 50%. Let's have a look. Oh, no, it doesn't tag 50%. If you'd have took the signal, then yeah, 1R done, right? Don't know again. Let's have a look whether the algo was in line. 67%. Yeah. There's the 50%. It's just shy. Off the target. No signal on these, right? So we're using the signals. So yeah, I think that's the only valid set. Well, do you use any prop firm? Yeah. Futures. Use futures. Everyone's been they've been a bit funny at the moment. I think it's just end of the year. Like, it's quite a few people reporting problems on Top Step X. So, but I'm with them and Apex. I've used Apex for a while. Executions are great. Can't argue with them. I've never been denied a payout with them. I know obviously there are questions over the new rules and stuff like that, the 30%, but I've never had any problems, so I can't really say anything. I would highly recommend a futures firm over a CFD firm any day. There's no different, right? Other than there's no spread. Why would you trade with spread? And the commissions are less as well. Here we go. Come on! I shouldn't have said that. But let's have a look, right? So this closes below, bearish. We're now coming below. We've got 2 more minutes. So, I mean, you could get out of break even. I mean, even taking the trade now, right? Even closing the trade now, if you're not happy, closing the trade now is absolutely fine, right? Let's have a look. Reason being is because here's your stop. That's like 20%. You're not taking a full loss, right? But you're taking your profits at full. So, yeah. That's why you see me a lot of the time. Sometimes, like, and it gets close, I just close it out. Well, sometimes I don't want to get my stress of, you know, the whole dick for a tick, like, just got to go that little bit further, and then, you know, even if you halved your stop now, right? I don't know. Anyway, the rules are, we got 1 more minute, and then we're going break even. Which is basically now. Come on. Okay. Last minute. Gold's tap that low again. There's no trade on gold. CL, you'll be going break even, right? On CL. So it'll just a question whether now it looks like it's going to go, right? It feels like it's going to go. It's just a question of, is it just going to tap back after this minute? But either way, you know, you're not losing this trade if you're in CL. Right? Stop to break even. Or below this low, but you should be taken out now at break even, so that should be a break even trade. You're corrective bullish as well, right? Straight away on oil, which means you're going down. NQ, very close to getting tapped out.
Order filled.
Just take that now. That wick down, it's close. I'll just take that small loss. Done. This was my risk, right? This was my risk. This is my loss. Right? 10%. I don't know. 180 for 22. I mean, it's still, it might take out break even if you do. But either way, I'm happy. I'm out. Trade over. Shitty afternoon. Great morning. Leave it at that. with that, guys, we are coming close to Christmas. We're going to keep coming on and you know, showcasing and doing what we can do. But it'll come a point where, you know, we don't really want to be trading over this time of year. Not because of the time of year or the data, more because it's Christmas, time with the family. It's important that we take time away as traders and don't do it all the time. So there's break even. If you did, no doubt it'll probably now go and take that low. Either way, doesn't matter. Other than that, guys, I've enjoyed the stream. Thanks for taking the piss out of me. Enjoy your evening, and I'll catch you later.